Hello, investors. This is Todd Thomas, Associate Portfolio Manager with Revere Asset Management. Today is Sunday, March 30th at 11 o'clock a.m., coming to you from Boca Raton, Florida, to bring you the Revere Roundup Weekly Review. Trend gauge on the right is showing the uncoveted 4 red arrows. This is the first time in a long time that we've seen this. The leaders are all down on Friday, all 21, over 21 was down, and we are continuing our red arrow in that one. All the short-term and long-term moving averages are down. The 21 EMA, the 50 EMA, and the 200 SMA on the S&P and the NASDAQ are all below those averages. Okay, so going on to what happened last week. What were the highlights? Okay, well, the indexes jumped on Monday on hopes that the Trump tariffs would be less severe. Okay, and then on Wednesday, Trump slammed the markets with a 25% tariff on all auto and auto parts not made in the United States. And then on Friday, we got hit with stagflation data picking up. The core PCE, which is the Fed's preferred economic measure, came in at 2.8%, 1/10 above expectations. Also, the University of Michigan consumer sentiment fell to 57, which was the lowest since, I believe, 2022. And consumer inflation expectations hit 32-year highs at 4%. And that was a multi-year high. And now 2/3 of consumers expect higher unemployment, the most since 2009. China told internet firms not to order NVIDIA H20 chips, basically because they do not meet China's new energy standards, if you can imagine that. Also, there were further signs of cooling in AI hardware demand. Also, there was a weak NVIDIA-backed CoreWeave IPO, which was priced at 40, far below the $47 to $50 range. And the Trump administration announced it would lay off 10,000 employees at the Health and Human Services Department. Also, on a positive development, Musk bought his own company. XAI bought X at a deal valued at $33 billion. Going over the S&P 500 sectors, we now have 3 sectors negative on the year and 8 positive on the year. The leading down being consumer discretionary, 12.17. Those would be everything from your Home Depots, your Starbucks to your Teslas. And then the technology, the XLY, is down 11.24%. And now you've got the industrials, which were positive last week, coming in at negative 1.22%. But we still have the rest green on the year, although they are very low weightings in the S&P 500. Looking at the heat map on the ETF front, you can see pretty much everything came in at maroon or red on the week, with the Qs down 2.48%, S&P down 1.48%. Everything pretty much down, especially the semiconductor index. Semiconductor index was down 16. This is the leverage triple, 16.86. The SOX itself was down 5.37, so by far the hardest hit area. Everything from NVIDIA got hit this week to many of the industrial semiconductor manufacturers, such as ON Semiconductor, that are tied to the auto industry. Pretty much everything across the board except for your inverse ETFs and VIX. Gold was up on the week. Silver was up on the week. Natural gas was up on the week. So all your natural resources. China was down 1.97% on the week. So across the board, weakness. On the S&P 500 individual stock front, NVIDIA with a big 6.82% decline, Avago, Broadcom at 11.76%, sharp break of the 200-day moving average. Apple basically flat. Tesla up 5.97% on the week. Some green, definitely in the defensive areas, your Cokes, your tobacco. Other than that, real estate, dividend areas, positive. Energy, a bright spot with ExxonMobil up 1.9%. And we're going to look at some of those stocks as we go into look at GEV and CEG. The data center plays got absolutely crushed this week. Earnings, very light schedule and very little companies of interest here. Next week, several economic numbers, including the Chicago PMI, ISM Manufacturing Index, and then some ISM services coming out. And then on Friday, you've got your big payroll numbers coming out. There's rumblings of the unemployment rate kicking up to 4.3% this week, and non-farm payrolls on the private area. We're going to be watching that, and if those come out below 100,000, those would send some alarm bells on a sharp slowing of the economy. Bearish sentiment continues to kick up with 5 consecutive weeks, I believe, above the 50% level. This is a rare occurrence in the last couple times this millennium that's happened. It's resulted in very positive results in the year ahead, but there's only a couple instances of this happening, so we'll see what happens here. But the market is still trying to find a bottom and a follow through with a very weak showing this week. Those IBD followers will recognize this. Just wanted to show real quick what the indexes are down on the week on the S&P. The NASDAQ down 10.3% on the year. One thing notable on this particular NASDAQ chart that always catches my eye is this advanced decline line, which has been really abysmal since last summer, really. And it shows that the NASDAQ composite was heavily led by large capitalization stocks. And you can see that this advanced decline line is making new lows here. Put to call ratio still has not spiked. We are still not seeing fear in the markets. The sell-off has been extremely orderly, and really the bulk of it geared toward the mega cap stocks. Just wanted to take a quick look at the foreign markets and show you how those have performed this year. As negative as the news has been toward Canada, surprisingly, it's up 0.7% on the year, and that's because they're heavily dominant in mining and natural resource stocks. Of course, the U.S. market's down. Mexico, big surprise, down it's up 10.3%. Brazil leading with a 15%, and Germany 17%. UK and France, South Africa, China up a whopping 17.7%, leading the emerging markets, and then Taiwan down 7%. So that's a look at the foreign markets. Next week's highlights: Tesla deliveries and Q1 production figures. They're expected out on Wednesday. The consensus from FactSet is 412,000, up from last year's number. But more recent estimates show a much weaker 355,000 to 380,000. Tesla arrivals, mostly all from China, reporting deliveries on Tuesday, and then the big payroll numbers for March. And now let's go into our charts. Okay, starting with the weekly on the S&P 500. Down 1.53% on the week, below all the moving averages. The short-term moving averages turning over. We can see that we broke a bearish wedge pattern to the downside on heavy volume on Friday. Next test, potentially the retest of the lows from 2 weeks ago. The NASDAQ also down with a whopping 2.59% down on the week. Almost at last week's lows here of 17,238. So if we undercut these lows on both of these index, our follow-through day watch would start over, although there's very little in the way of leadership that right now that would be a strong area for us to plow into on a follow-through day from here. We did get a follow-through day in spirit on Monday, although we didn't get the volume characteristics we would want to see, but many were calling Monday a follow-through day in spirit because the previous Friday was a quadruple witching, which has extraordinary volume, only happens 4 times a year. So it looked promising, and Tuesday we made a higher high. The S&P 500 was able to overcome the 200-day moving average, spent 2 days, and then basically a gap down on Wednesday as the Trump tariff talks started kicking in and sent the market into a tailspin into the end of the week. Then we have the QQQ, which was down 2.47% on the week. Equal weight down 1.7%. The equal weight S&P 500 was down less at 1.17%. Also, after spending some time above the 200-day moving average, reversed down, acting a little bit better than the other indexes. So under the surface, the market slightly better. And we also saw that there are still 8 positive S&P sectors on the year. Russell 2000 by far the weakest, down 1.6% on the week. But again, currently the only index with the death cross occurring, 50 crossing the 200-day. However, we'll watch it to see if it can still hold this major support in this area, which it tested a couple weeks ago with a low around the 1984 area, 2000 area. Volatility index, VIX, up on the week. Incidentally, before I go on, I do want to go back to the S&P 500. I want to look at a monthly chart too. Was looking at stochastics on the monthly chart, and we are getting a cross on the stochastics here. Last time we saw this was 2022. We saw this also up here. Look at this. During COVID, we also saw this cross occur 2018 a couple times. But it ultimately didn't start falling until this particular one. And then in 2015, we saw a Stowe cross, which resulted in a downward. And then we had this real big cross down here in 2008. That was the financial crisis. Now, we did kind of trade up and down through it throughout 2004 through 2007, but then ultimately kind of fell below this kind of 80 level on the Stows. So we're gonna see if we're gonna do more of this chop and bounce around here, or whether this cross gets deeper and we get into a deeper correction and possibly a bear market here. So inconclusive right now, but is a little bit of a warning signal that we are seeing this stochastic cross for the first time since COVID, or I'm sorry, the 2022 bear market. So I'm going to take those stochastics off. Let's go back to our list, the VIX. VIX was up on the week, but only at 21.65, so still far from extreme fear levels. US dollar was basically flat on the week. 30-year yields were up slightly, and 10-year yields were basically flat. The TLT, which is the bond prices, those turned up, gapped on Friday on the week piece, or I'm sorry, despite the PCE numbers coming in a little hot. more of a flight to safety there on Friday. So on the week, the XLE was basically flat, but we are watching this giant base, and we are seeing some energy names starting to look better. Bitcoin was down on the week, 0.29%, so it's basically flat, but continues to trade below the 50-day moving average. Semiconductor index by far the weakest, down 5.37%. Incidentally, if you really look at what's happening in the U.S. markets, you've got a couple major areas really getting hit. You've got the mega cap group, definite allocation away from the mega caps, and again, that's so much money, and that reallocation is going into Europe, emerging markets, and also reshuffling into some other U.S. sectors. Definitely more defensive, energy, gold, silver. So you definitely have a big reallocation where the top 10 stocks in the S&P peaked at almost 40% at the end of last year. And I believe Ted said now that's down to about 33%. So still very heavy concentration, but you've had a massive drop down in the Magnificent Seven and the top 10 stocks in the S&P and reallocation outside of that. The second major area is semiconductors. And this area is very heavily tied to AI. And ever since DeepSeek came out, we have seen a definite heavy distribution out of the AI semiconductor areas. And then this week, we saw a lot of the industrial semiconductors extremely weak on the auto tariffs. So this group is extremely weak and back to like 2023 levels. And, a lot of support in this area. You've got these highs from back in 2021 with the semiconductor index showing some support on those 2021 highs, but virtually all the progress of the basket of semiconductors being given back to multi-year lows. KWEB down 1.5% on the week, but still holding in this strong new stage 2 base area. Silver closed out at a 3.26% gain on the week. Folks, if you get a chance on Friday on our weekly podcast, I went over some of the dynamics happening with silver. There's a record short position on silver, near record short position. The ratio of silver to gold is really at an extreme. It's right around, I believe, 90 to 1. So it takes 90 ounces of silver to buy 1 ounce of gold. That is averaged more in the range of 50 to 60 to 1 throughout history. So this, and then you have gold making, new highs, new all-time highs. Silver is still well off its all-time highs. This only goes back to 2010, but the ultimate high in silver was in 1970, I believe, or the early 70s. This came close to breaking that high. However, did not break the 1970s high. So we're still off these 2011 highs in silver. And this is while gold has far exceeded new highs. So we are definitely watching silver. And I believe tomorrow there's going to be a coordinated effort by retail investors to squeeze silver into new highs, just like the GameStop situation. So I don't know if there's enough buying power for that, but we'll see if these retail Redditors can come together and squeeze silver and cause a massive short run on this near record short position in silver. Gold, again, looking at this monthly chart, again, once we broke out of this huge base that went back to 2019, gold has never looked back and closed out the month up 7.9% on the month and up 2% on the week. Gold miners also 2.4% on the week, did back off on Friday. Somewhat of a reversal after breaking out to new highs there. This is the Euro 50 down 1.79% on the week. Broke the 20 EMA. Still above the 50 though. So nice little pullback in that area. And the Mag 7, this is an inverse. Well, this is not the inverse ETF. This is the Mag 7 ETF. And this was down 2.7% on the week after an attempted rally and a kind of a bear wedge here. Broke, closing in on the lows of 2-3 weeks ago here. So looking ominous here as a potential break into new low territory for this, which would bring this back into the mid to summer of 2024 area. And that's it for the highlights. Now going into the Mag 7 on the week, again, Apple not as bad as the rest, down 0.17%, but still below all its averages. Amazon below all of its averages, and you've got the 10 crossing the 20 to the downside. Google further lows here on the week. Meta still above its 200-day moving average and 40-week average, but closing in on that as well, down 3.27% on the week. Microsoft triggering a massive head and shoulders top again here below the 380 level. That targets Microsoft into this 343 area potentially, so that is not looking good at all, down 3.18%. NVIDIA still above its lows from 3 weeks ago, but down a whopping 6.82% on the week, you can see here. If NVIDIA breaks below this 104.77 area, this would be a new stage 4 decline. So this is in a late stage 3 topping pattern. Below this 104 area would put NVIDIA into a new stage 3 decline. So NVIDIA holders want to watch out for that situation, as this could correct substantially more. And finally, Tesla deliveries expected this week, up 5.97% on the week, and made an attempt to get back through its 200-day moving average, but sold off with the rest of the market on the tariff situation. Tesla expected to benefit more than the other auto producers, since all their production virtually is in the U.S. for the Model Y, the Model 3 here. A lot of parts still made overseas, but on average, they're saying a typical car, even a U.S. manufactured car, could see about a $10,000 increase from the current average. Already, most cars are $40,000-$50,000, so you're talking $50,000-$60,000 for just basic cars now. So getting highly unaffordable for the average consumer to buy a new car, and Tesla's increases are expected to be less. So we'll see what their numbers come out with next week. And finally, let's go through the watch list for the week, sorted by industry group. Right now, the top industry group is the precious metals, and wheat and precious metals, both producing gold and silver, continuing to make new highs, extended, hitting the price target zone after this double bottom base breakout. So not actionable here, but strong. Harmony Gold also quite strong, broke out this week out of this cup with handle buy zone. Pan American Silver, 3-week tight. Watching this, talked about a VCP pattern here. This to this, this to this, this to this. Now we'll see if it can stay above its 8-day EMA and build maybe a tight pattern for an ultimate breakout above. So watching this name, since silver is looking pretty good. McKesson Defensive, 4 or 5 straight up weeks. Slow mover, but relative strength climbing here. Cardinal Health, generic pharmaceutical manufacturer, broke out of a stage 1 base Slow stock, but strong relative strength. Progressive in the insurance area. Again, defensive area, not of high interest to us, but definitely a stage one breakout. Gaining little progress though. Chubb, stage one base, also relative strength making new highs. Travelers, WR Berkeley, one of the few insurance stocks that actually broke out, up 12% on the week. Closed at the lower end of the week or of the day on Friday. I believe Japanese company took a major stake in this. This is what caused this to break out. Philip Morris in the tobacco area, MO. British American Tobacco, another one with a 3-week tight, off a little bit on the week. Actually a 4-week tight here, 7.3% dividends. So all these pay heavy dividends. And, again, with bonds and yields coming down slightly, as well as the defensive nature of these stocks, they're all hanging in toward the highs. RTX in the defense area down on the week, but fairly tight. Northrop Grumman advanced 4.38%. HEICO, relative strength making new highs. Manufacturer of jet engine and aircraft components. We'll see here also that, this is a beneficiary of the defense area, building new aircraft, as well as Boeing, getting their act together and now showing big growth in the next fiscal year. Kratos Defense, this is a drone maker, relative strength making new highs, 3-week tight, stage one consolidation. Not heavy growth here, picking up until, September of 25 and December of 25. It could be a big beneficiary of the drone warfare. Boeing, still really meandering around in this stage 4 area, but could quickly catapult into a new stage 2 uptrend. Or, I'm sorry, a stage 1 here. Could see a stage 2 with a breakout over 188.66. You can see fiscal 26 showing $3.87 for 451% increase in earnings after 1, 2, 3, 4, 5, 6, 7 negative earnings years post-COVID. So company's been struggling post-COVID, as well as several safety issues with the new aircraft. But now looking as a major turnaround play potentially, both in defense. They were awarded the new contract with the U.S. government for the F-47. So multi-billion-dollar contract last week there, which last week it was up 10.7%, and this week down 2.6%. So definitely a stock on our watch list. This earnings line has been cratering here for the last year, but we should see it starting to pick up, as we can see, with an increase this year and next year. T-Mobile hanging strong. Again, AT&T, Verizon, defensive stocks. T-Mobile, definitely more growth here compared to those other two, and a stronger company. Okta rejected on a breakout of a 3-week tight. Had high hopes for this, but definitely broke through the lows of this upward channel. Not heavy volume, so we'll keep this on the list. Broke the 21 EMA on the week, but this one still could come back and lead. So going to keep an eye on Okta still. As the 25% tariffs kick in on, I believe it's April 3rd, and this is when all the Trump tariffs on Mexico and Canada and the reciprocal tariffs are supposed to kick in. Next week, a big week there. But O'Reilly Automotive broke out to new highs, up 5.19%. Again, consumers may hold on to their automobiles a lot longer and need more repairs. So O'Reilly and AutoZone broke out this week. Both extended, but could be new leaders if these tariffs do in fact hold. India Bank, low relative strength still, but up with a stage one base here. Indian Bank looking good. Deutsche Bank extended, but eating. Take Two Interactive down 4.7% on the week, but still within this space. So this would still be on our watch list. Another insurance company, Brown and Brown, broke out of a 4-week, 5-week tight pattern. Ryan, same situation. Looks like a lot of these financial areas, exchanges that are doing well due to the volatility and heavy trading volume. ICE, another one, CBOE, all these stocks are doing well. TraderWeb, which operates, I believe, over-the-counter markets, especially in the bond area, made further progress. This has been strong and still on the buy zone. Relative strength just exploding on this stock. So still on the watch list. Nutanix, one of the few computer software, enterprise software companies that still looks decent. Now here we get into the oil and gas area. KMI, Kinder Mortgage, which is in the natural gas transport area. Relative strength making new highs in the stage one base. Hess Midstream, another one. Antero Resources, oil and gas exploration, rejected on a failed breakout, however, still really above the 50, the 20, and close to the 80 MA, so that could re-advance itself. EXE, TurboTection took a position in this and probably one of the best looking stocks in the natural gas and crude oil area and closed out at all-time highs. So congratulations to TurboTection on that. And what a beautiful, beautiful multi-year breakout here. Definitely best looking stock in this area. Another one here, Range Resources, still building up in this double bottom base. Williams with a failed breakout last week, but still, again, very tight above its 21 EMA. EQT, another one here we're watching. Geo in the prison group area broke back above its 50-day moving average and looking constructive with some nice growth ahead of it. Garden Restaurants, one of the only restaurants that made new highs last week on earnings. Yum China, stock I still personally own here on this breakout of a clean and simple base through this area. Again, I won't give it much more room, but it's still basically hanging above right on this area here. And China still looking strong, although it was down on the week. So down 0.75, not bad. BJ's holding in there. Ollie's relative strength making new highs. They reported earnings last week. Had a little shakeout here below its average, but closing in on a double bottom base breakout with relative strength making new highs. So, again, they're supposed to open up several new stores. And, as a lot of companies go out of business, they're a beneficiary of obtaining new inventory. And as the lower end and mid-end consumer starts to deteriorate here as things are slowing down, this could be a stock that benefits on the discount side. Here's a biotech stock that looks pretty decent. Had good week here, good accumulation. Several biotech stocks look good. TGTX backed off on the week after hitting new highs, bounced right off the 21 EMA. So this still looks like a leader in biotech. Again, this is a company that makes MS drugs. Excellus, another one. WGS in the diagnostic testing area still, unable to get going, because of the weight of the market. But again, still trading above the 50, but below the 8 and the 21 EMA right now. Halozyme down on the week, but strong. And Alnylam Pharmaceuticals building a base here with relative strength, making new highs. Onto the China names. BZ looks good. This is a stock that looks interesting. Relative strength making new highs in the oil and gas exploration and machinery area. Just has had a rapid V bottom off of the lower end of this base. Had earnings, but then made a new low. And not sure what the news is here, but this is pretty powerful. Bristol Myers holding in there tight. Again, in the pharmaceutical area. Novartis also multi-week tight. Hess in the oil and gas area, trading in this 25% base. Again, many of these oil stocks are in multi-year basis, so we're watching this. Alibaba backed off on the week, but still watching this as it's in this new stage 2 uptrend. Again, we've cited this several times. Stage 2 uptrend. Below all of its short-term moving average here, but hanging really close to the 21 EMA, so this could quickly resurge itself. So we're watching this closely. Ted, actually, Connor talked about this in our podcast on Friday, did a great job showing some of these. SE, another one, it's been on a watch list for a long time. Primo Brands, new highs. This is in the carbonated and water beverage area. Salerno Therapeutics, big breakout on news this week. Keep an eye on that one. This is a stock RB Global, and I believe they do auctions. Second. MP Materials, stock on our list for a while. And that wraps it up. Again, extremely weak, especially in the semiconductor areas. If you want to see a lot of detail on what happened in a lot of the bear flag breakdowns, check out Friday's Revere wrap-up that Connor Bates did. He did an excellent job of going through, all the bear flag breakdowns. Ted and Connor had been talking ad nauseum about, these breakdowns in the semiconductor, the Abercrombie and Fitches and several names. So they've done a great job covering this and warning everyone to really be careful here. So wrapping it up, again, my name is Todd Thomas. My email, if you have any questions, is todd@revereassetmanagement.com. My Twitter handle is toddmichael70 on Twitter. If you'd like to become a Revere client, give us a call at 855-REAL-WEALTH and ask to speak with Don or Dan. Thank you very much. Have a great weekend,